Happy New Year. I realize this is the first video for many of you, and welcome aboard. Looking at the year just past, we lived through perhaps the most volatile year that we've seen in markets and in the economy in my lifetime. It was amazing. The market was within striking point of 30,000 Dow Jones number, and then the coronavirus stepped in and did its damage. It ran through our economy, causing great fear, death, and the market's response showed that fear. The market fell 11,000 points without blinking an eye. And near the bottom, the Federal Reserve, the U.S. Treasury, the administration were literally throwing money into the streets to help lift the economy and help buoy confidence, and it worked. They gradually picked up this beleaguered market and economy and lifted it back up. And we closed the year at an all-time high, over 30,000, by quite a bit. Remarkable, remarkable. Our process, which is 42 years old, that's about the age of the firm, and we've been a macroeconomic, big picture, top-down, if you will, type of a firm. Our process was severely tested. When you move 24,000 Dow Jones points in a year down and up, it's hard not to be tested. But we looked at the worst part of the market when the Dow was down over 35%. Our accounts were down between 6 and 7%. So we know it protected on the downside, but we also know it captured decently on the upside for balanced accounts, double digits. We closed out the year with double digits positive. That's good. So what's ahead? Well, the market's not cheap. It's fully priced. But we also are looking at an economic projection that shows 4% growth. We're looking at corporate earnings 10% plus this year to increase. No inflation in sight, so interest rates will probably remain low. Low interest rates mean high price earnings ratio. That's the price at which a stock is priced versus its earnings projection. It's all pretty bullish. And we could see a run up 35 to 40,000 this year in the Dow Jones. Our projections, of course, include an assumption that the Republicans will win the Senate race in Georgia that's going off right now as this video is being taken. With that assumption, we think there'll be a lot of confidence and the Republicans will be able to stop the draconian tax legislation that the Democrats would like to put upon us. And if they can stop it, then you've got a very static environment that should show growth. If, however, the Democrats take control of the Senate by virtue of winning both Senate seats, the scenario changes. Rather than going up, we can see corporate earnings begin to go down because of the increased burden of taxes. If that happens, we can also see the economy begin to tail off. A bad picture for markets in general. The census that was taken last year is going to cause redistricting. And this redistricting appears to take 10 seats away from the Democrats in the House by next election. So when they reshuffle the cards with redistricting, the Democrats could virtually lose control of the House. So we expect them, if they have the votes, if they win the Georgia election, we expect them to be very aggressive towards achieving their agenda, higher taxes, more controls, et cetera, et cetera. If that's the case, we want to be in the front of the sell line because a lot of people will be liquidating positions to avoid the increased taxes that are apt to be coming. It could be a pretty bad scenario. At this point, we don't know. All we can do is wait and see. Wishing you the best, wishing also that Georgia turns the right way. Thank you.